After several down days last week, corn managed to end in the green on Friday thanks to some help from wheat. Michelle Rook joins us again from here at Commodity Classic with some insights into what we're watching this week.
A mixed close in the grains on Friday. Brian Doherty with Total Farm Marketing is joining us, and mixed on Friday, but a lower week in all of the grains and the funds liquidating. How much technical damage did we do in the grain trade?
Pretty heavy technical damage, in particular in the corn. Wheat was already in a downtrend, but wheat punched into a new low for the calendar year, as did corn. Corn prices reached their lowest level in some contracts since August, others since July. So some pretty heavy technical damage. Got close to filling a gap on the July corn contract that was left in June. So it's a marketplace that really saw a lot of liquidation, particularly the fund money. It was moving out of longs. The dollar has been higher all through February. It's a pretty tough road right now if you're not looking at the technicals and wanting the market to be bullish. You just don't have enough dots to connect, and it's been a slippery slope, and it slipped off the downside right now.
A lot of it was tied to money flow. A lot of it was tied to concerns about what Fed Chairman Powell said about interest rates going ahead. So will the funds keep liquidating, I guess, because they are concerned about that?
Sure, if you look at a net cumulative position of funds, it's an inverse relationship to interest rates. So as interest rates have gone up since midsummer, the fund positions have actually been on a decline. So the money has been gradually, if not steadily, leaving the marketplace in a lot of commodities, but in particular wheat and now corn.
Fundamentally, are we justified to be this low right now?
The question might have been fundamentally we're justified as high as we were, let's say at harvest.
Okay.
So I think we're getting to a point now where you can argue we're getting oversold. It's become a value to the end user. If you look at like the carryout in soybeans, paper thin, not a lot of room to air in South America or the US. We need big corn acres to fill demand. You'll have more demand here. At the outlook for them, we saw the USDA already penciling in more export expectations. So we're getting to fair price levels for the end user. And if I'm an end user, I'm getting ready to step up in a bigger way, because this is what I've been waiting for 8 months. And we've got all the uncertainty of South America, the US, Northern Hemisphere, all the production uncertainty.
Well, let's hope the pullback starts to stimulate some demand and maybe gives us a little bit of a recovery rally. Thanks so much for joining us. Brian Doherty with Total Farm Marketing. Will have more Ag Day coming up.
To discuss marketing strategies, call 800-334-9779.